All right, we are live. Awesome. Good morning, everybody. Back again, day trading, scalping, the NQ on New York Open. How's everyone doing? I see we already got people in the chat. Let me just get a screen up just as we open, and then we'll get this going. All right, we're about to open. Daniel, good to see you. Hello, good to see you too. TM Cloud, good morning. I just added the footprint to my trading view today, ready to try this out. Awesome stuff. Good stuff. Cody, good to see you. Holy Earth, David, Thomas, Amar, good morning, good afternoon, good evening to everyone. Hope you're all doing well. Oh, we just opened. All right. Con, good to see you. And Heng. Let's just bump this up a bit. 24, usually for the open. All right. Let's see what we're doing. To be honest, I have yet to really look at the chart. Prasad, good to see you. Cherry, great to see you as well. I just want to draw out any kind of gaps. Oh, they're still kind of in play, so that kind of works. Let me just go on a 15-minute, just mark up the charts because they're looking a little bit messy. So we had this, obviously, the push up for the last however long. We rejected pretty much of that low volume node yesterday, and we just kept kind of plowing up. And then today we've kind of gone back down and started retracing. So I am going to do a volume profile from the bottom to top. I kind of drew that a little bit off, and I'm just going to draw out the gaps. So let me do that. Get them all nice and accurate. There's a tiny little one there. It's pretty much been filled, and then we can actually start looking for trades. Oh, we got one more. But it's kind of been traded through a few times, so I'm a little bit skeptical about this one. Yeah, we've traded through it. I don't really think this is going to hold anymore, so I'm going to get out of that one. I only got one right at the top here. Still needs to be tested. So we're in a very kind of choppy area as a whole. Lots of stuff happening below, above. There's technically another one there, which kind of lines up with that one. So I'm not going to put it on the chart because it literally lines up exactly. And that's pretty much it. Okay, now we've got the charts up and everything drawn out. We can actually take a look at what's going on. And it looks like we're just trapped between these two areas. Went to the top here just now at the open, rejected back down, come back down to here. A ton of buy volume came in. My God, 3,000 contracts, and then instantly another 1,000. So again, it looks like it's going to be a very rangy kind of day, potentially. Peter, good to see you. And another Peter. We've got two Peters next to each other. Peter Ferreira. Sorry if I'm like butchering your name. I'm terrible with names. And Peter Cosmas. Good day. And Luca, good to have you. Hello, happy Friday, everyone. Yes, it is a Friday. What's everyone doing for the weekend? Any good plans? This doesn't look like a promising Friday, I'll be honest with you right now. Just from the open alone, the fact that we had this, ton of buy volume and then a bunch of sell volume. Sellers seem to be more efficient at getting it down than up. I mean, you can almost see that perfectly in just these two candles. You don't really even need to do much calculation here. But 3,000 extra buy contracts got it that high up. 1,000 extra sell contracts got it that far down. It's pretty much identical. So I would lean more on the sell side for now, but at opens like this, it usually you have like a very rangy, choppy day when the open is very kind of up, down, up, down. It doesn't really know what it wants to do. But that does give you more opportunity to actually scalp. You can, when you don't have a bias at all, we're just literally stuck between two areas. And the more we kind of play around here, the more messy these charts are going to get. But what can you do? So it's going to have to be very quick scalping today. No trying to hold it, trying to get, big extensions. Very quick scalping is kind of on play, I think, today. Omar, good to see you. Good morning. Thomas Globo, good day. Good day to you, brother. Cody, for FOMC Friday, historically, I have a losing day almost 100% of the time. Yeah, wouldn't surprise me, man. It's good that you're tracking that kind of data, though. Looking back at your previous trades, tracking it, that's really really good, because then okay, I'm not going to trade that day. But it's looking very rangy, straight off the open. Let's see what the 5 minute. If you can see anything better on a 5 minute. I mean, a 5 minute, obviously, you don't see that bearish move because it happened within the candle. But yeah, as a whole, there's really nothing right now. We're just gonna have to sit it out and wait. Unfortunately, we'll play with small micros today. That's definitely a good idea. Definitely a good idea for today. I'm just going to see if the Project X charts are marked up correctly. Oh God, look at this. This looks terrible. Come on. It will load. Sean Evans. Cody says currently down 70 cents. Off. Don't make it worse, Cody. Sean Evans. Hello, Sammy. Do you have a reference code link for Ola Prime? Yeah, so you can get 25% off by using this code, SAM25. I've put it in the chat right there. SAM25. All right, that's 25% off any Ola Prime challenge. Yeah, again, I mean, there are a bunch of tiny little gaps, like there is one here, but we've traded through it so many times now. We've never really respected it, except right this second. I don't know why I got this one on the chart anymore. This one's no longer a gap. So I can get rid of that. There's no like really nice gaps. There's one, like the one down here is nice. I like that one. Higher up, there's nothing really too great. This one looks good, but we've traded through it. It respected a few times, and then since yesterday, it broke through and then just basically invisible. So I'm no longer counting that one. Like there's tiny micro ones, like a little one here, which gets respected sometimes, but not a lot. And we need to break out. We need to actually get a bit more movement somewhere. We need to get out of this choppiness area, this choppy area, and then we could have something. Peter, UK weather, so pub. Don't blame you, man. And for the weekend, watch the rest of your videos. Awesome stuff. Well, I hope you enjoy them. Good to hear. I saw your video on volume profile, and it's very nice. Thank you. I'm glad you enjoyed it. I'm going to spend the weekend making more videos for the channel. So I'm going to be doing a footprint one, full strategy one. I've got a few ideas planned. But if there's anything specific you guys want me to break down, let me know in the chat. I'll make a note of it now. Yeah, this open is filthy. This is a filthy open. It's interesting. I mean, I would say the buyers are becoming more efficient now, because when we opened, the cumulative was at 1,730 to the buy side. We're now at 1,000, give or take, to the buy side. So there's been an extra 700 contracts that have entered since the open. We've actually drifted a little bit more up. So there is a slight divergence in terms of the buyers seem to be gaining more kind of efficiency in the market. But considering we're still very much in this range, I wouldn't like buy, and we're in that gap. It's a bit, it's conflicting. Two things are conflicting among each other. So you're going to have to hold off for a bit. Footprint would be nice. That's definitely coming, the footprints. Don't worry. Don't worry. Anatoly, hi brother. We talked today on Instagram. Oh yes, of course. Good to see you. Thank you for tuning in. T5C, how you doing, buddy? Good to see you today as well. Good to see you. I'm doing very well. Thank you for asking. Doing very, very well. Had a bit of a busy morning, but you know, I just want to sleep nowadays, man. I don't even want to do anything. I just want to sleep. Like I'm genuinely looking forward to just not waking up in the morning. Do you know what I mean? I got like bags under my eyes. Look at this. I don't know if you can tell, but genuinely, I got some pretty bad bags forming. I've been lacking on the sleep every day. T5C, it's 3L1T3. That's like a tongue twister, that is. You couldn't have picked an easier username, can you? That's elite though. Okay, elite. All right, I get it now. Elite. I'll remember that. Elite is easy. I can do that. How many hours sleep do you average? Well, normally not bad, but lately, I don't know, man. Like my brain is just awake at night times. I don't know what it is. There's nothing happening. It's not like there's anything happening in my personal life that's keeping me up. I'm just struggling to sleep a little bit. I need I don't know. I'm so like there's so many things like work-wise constantly happening. I'm like thinking about it. I'm not detaching, you know. It's fine though. It's fine. It's not a problem. And I don't really like take meds or anything. So I'm not gonna like take sleeping pills or something because that shit will just, in my opinion, will fuck you up. Like you get dependent on that shit, and the next minute you know you can't do it. You can't even, I don't know, brush your teeth without taking some tablet. Do you know what I mean? Get some coffee. I've already had it. I downed it just before, nice and empty. What if you see a candle with a bunch of sellers, a lot of sell contracts, but the candle is still green and pretty high? That's a weird one. So that's called delta divergence, right? On a 1 minute candle. That one usually appears at the top or bottom of like a move, but it can indicate either a reversal or a continue. I've looked at the statistics of it. I've literally back tested the statistics. It's like flat 50-50. And truth be told, I can't fully figure out what exactly why that is. I'm struggling to kind of make sense of it. So I just ignore it. When I see one of those candles, I ignore it because they are, you can back test it. You can check the like the data. It's flat. It's complete 50-50. But to me it doesn't quite make sense. So I don't know. If something doesn't add up and it doesn't make sense and I can't figure it out, I just try to ignore it, I guess. But it usually happens at those areas. Like literally, we got it there, I think. Oh no, that's that one. I don't even know which one's this. Yeah, here. So here, look. It's a bullish candle with negative delta, and it usually happens at tops and bottoms. This time it created a reversal. Other times it could be like a continuation. It's completely flat, but it always happens when something's about to happen. So I guess it depends on the situation of what is actually going, because the only reason that could ever happen is, well, why would there be more sellers in the market? It's either aggressive sellers. It has to be aggressive sellers, right, for it to appear. But who are those sellers matched up with? That's obviously matched up with buyers, right? So it could either be a bunch of buyers trailing their stop losses, right? If they're like trailing tightly and then get taken out, that will appear as a bunch of sellers because they're, I don't, or it could be genuinely just a bunch of sellers entering and overpowering. I don't know. It could be a lot of things, but I tend to ignore it. Afghan Bit, good to see you. How are you? Man, that sucks. Little sleep is not good. I'm here in Brisbane, Australia, and only go to bed around 6, 7 a.m. in the morning. Oh, damn. You know what? Fair play to you, man. I've always said if you lived in Australia, trading just becomes that much harder because of the time difference. You guys, it actually becomes inconvenient to trade for you. Like we're very lucky in pretty much, in the Western world, I would say. Well, actually, even more, even well, unless you go like really deep into Asia, all the time zones go, similar. But like more in the Western world, we're very lucky because we got the London and New York kind of crossover, that kind of whole, two big central hubs right there with most of the volume for pretty much most instruments. So we have that time advantage. 25,890, you have it. It's 6 candles back. You can see it. Okay, yeah. I just pointed that out. Yeah, I hope you're fine and healthy. I'm doing well. Thank you, Afghan Bit. Edwin, hi Sam, new to your channel, enjoyed your videos. What's your view on adding VWAP as a confluence? VWAP is great, honestly. It's good. I personally don't really have it. Like I have it on the chart available and I can like make it appear as an indicator. It's taking forever to load. But personally for me, just having lines on the chart, I don't know why, but I don't like it. Because my brain, if I'm in a trade right now, say I shorted right now, I would start just seeing that line there makes me a bit like, oh, I don't know, oh, get out or whatever. So it could, but I don't really use it. I like to sometimes have it just look where it is roughly, but it's not something I use a lot. But people swear by it as well. I know it's a genuinely good tool as well to have, and it makes sense. It's just volume weighted average price, right? So it's basically a moving average, but with volume into consideration. So, and a lot of people have it on the chart, so they are very aware of it, and it creates a self, fulfilling prophecy in that respect as well. So, well worth using if you can find an edge and add it as a confluence in your trading strategy. Absolutely do that. And what time frame you plot volume profile to look for low volume nodes? Also, do you watch daily volume profile or TPO for a bias? Good question. So yeah, I do it. I do it pretty much in every time frame for the most part. But day to day, 15-minute is for the kind of, I call them medium term areas, right? So any kind of big moves we have from the 15-minute, and they can span multiple days, doesn't matter. So this whole move up, I've got it, all the zones, right? If we start trading through too many zones at once, or they start getting disrespected, I get rid of them. And then also, since we've had this push down, although technically I would say we're still more in the medium term, we're more in the bullish market, technically structure wise, if you're looking, just kind of squint your eyes, it could still very easily reverse. So I add this downward push as well on the 15-minute, just to see if, if we trace up, where could it potentially continue if it does want to, right? So we had, a little touch earlier or really late at night yesterday on it there, and it kind of pushed down a bit. But it's a very, look how many zones there are. It's all a bit mental right now. It's not very clean today. This whole area has a lot of traffic essentially. So that's why I said, if you're trading today, really quick scalps is probably your best bet, rather than kind of waiting for big moves to occur, because it looks like it might be a range day, like a very annoying range day. And then, but it doesn't really matter the time frame too much, whether it's 15, 5, 1 minute, as long as you're catching, the major moves that started something, right? Like this started a big up push. That's where, it started all the way down here. And then this move down is still a significant move in my opinion, right? So I'm drawing it. Whether you want to use 15, 5-minute, 1 minute, doesn't really matter. It's the same as long it's really from the top to bottom and bottom to top of significant moves. That's essentially all you're looking for. Now, if you start trending, if the market starts trending, like here where we had, typical trending structure, right? And we're just kind of pushing up, then you can do from every individual leg on a smaller time frame, right? So you can go to like the 5-minute or whatever. So we had one leg here, pullback, continuation. So you could draw, like, imagine this pullback is starting to occur. So you can draw from each individual leg. And I'm going to have to turn off 1 second. Come on. It's not loading. There it is. I have to turn off extend right because that extends it all the way. So I want it to stop there. Then, if you're in a trending market, then you can look for just pullbacks and continuation, pullback, continuation, right? And you can look for areas. Now, didn't really ever touch the one again. Didn't go back deeper, but all right, fine. Didn't pull back enough. Then you go to the next one, from top to where it started retracing. And you look, okay, there it is. Oops. There's like the most clear, obvious one is right there. That one looks lovely. So you draw that one out, you wait for it to get into that area. Hopefully it does. Boom, it does. That's your continuation point. You see what I mean? So in a trending market, you use it essentially like Fibonacci. Imagine you're just using a Fibonacci tool, right? Really, really simple. When the market's very choppy and kind of rangy and like we have now, in a tight range, you just cannot use it, full stop. But you need to have some movement. But since we've had, this very, big push up and then pretty big push down, we've got a lot of areas. And truth be told, no one knows where it's really wants. It's just going to keep bouncing around until eventually it clears these areas. Do you know what I mean? So you want to be looking more for like quick scalps then, because it's just going to be ultimate chop. And just like these two areas that we have here, it's just bouncing up and down between them. It's not really going anywhere. We're just in the range. So you could trade like range bound if you wanted to. That's perfectly fine. Lived in London for 3 years. That was awesome. Ah, nice. Hi, Sam. Regards from San Luis Potosi, Mexico. Amazing. Miguel, welcome to the channel. Good to have you here. Prashad, I'm from India and it's much hectic to manage every session. I can imagine as well, yeah, of the time difference. Why was 25 and 940 not a good place to short? 940. It was a good place to short, to be fair. Like it's in a gap. It's not a bad place. I just don't really have. I mean, you could have absolutely done it. Like it's actually decent. You saw the sellers come in. You could have absolutely done a short there, but it technically fit the requirements. But I like to kind of have direction if I don't have a bias, especially in a choppy market like that, like it's currently. It's just, I don't know. I don't like trading when the market's like this, because it's just, I don't know. I don't like it because the volume changes so quickly. Like if buyers decide to come in, boom, 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 it goes back up, and then boom, 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 it goes back down. I don't know. I don't like chop, basically. I hate chop. I want a bit more calm movements, I want a bit of direction. I want people to agree that we're either going to go up or go down and not, fight each other, because this is just a battle. Buyers, sellers, they're all fighting each other. I don't really want to get involved. Let them fight it out. Andy the Greek, crazy morning, got one eval to funded status. Amazing. Thank you, Sammy. I've learned so much. I usually work full time, but I have a day off. so I can actually watch you live instead of replays. That's incredible. Really, really good. Hey, man, you should enjoy your day off as well, though. Don't know how enjoyable it is to watch me. Going back to 890. Daniel, yep. It's just going back down, and now the point of control is dead in the middle of it, as you would expect. I want something to break, though. VWAP works well. Good stuff, Peter. Isn't it usually like this? After big move like yesterday, big boys made their money, so they're in the pub now. A lot of the time, yeah, there can be, especially on a Friday as well. Fridays are historically known to be a bit, so yeah, usually, midweek is usually the good days. Wednesday, stuff like that, they're usually quite good. Fridays, you kind of get that indecision in the market. An indecision basically looks like this. So, and you can see that there's no decision here at all. I mean, if you just look at the cumulative delta as well, we're not really going anywhere. We kind of go up and then we go down. So we went up a bit, up to 1,000, peaked a little bit, and then we went back down into the negative, and now we're going back up into the positive. It's just completely flat. A lot of sellers joined on session cumulative volume delta. It's yeah, exactly. Understood. Today I read somewhere that more than 2 trillion wiped off from gold today. Crazy time. I think it was about time. Gold was looking a bit meme coinish there. It's bouncing between upper VWAP band and VWAP. Interesting. Yeah. Good little range, I guess. But it will break eventually. Hopefully it does something. A lot of sellers joined. Can you show the names of the indicator? It's not really an indicator. Like it's literally a chart type. Are you talking about the footprint chart, like this, with all the numbers in it? That's literally a chart type. I have a video on my channel called how to set up the volume footprint on TradingView. Have a watch of that. That will make it clear. Okay. And in terms of the volume profile, this thing here, let me show you. With the bars, again, my latest video on my channel shows you how I use it. That's technically not an indicator, but you can call it an indicator. It's on the sidebar on TradingView. Under volume based, you got fixed range volume profile, right? And I'll show you how to use it. So it's just ranging, but it's respecting VWAP so far. Interesting. So yeah, VWAP is decent then. Jed, hi Sammy, nice work. I notice you don't have a predefined stop loss in your trades. Have you got a rule for stop losses apart from your reading the footprint? Yeah, so you're absolutely right. Like obviously I have okay, so let me explain. That's actually a really good question. Let me explain how I kind of look at my stop losses, right? So if we take, we got into this gap here, we saw sellers come in. Say I wanted to jump in at this, 400, as soon as these heavy sellers came in a bit and I wanted to jump in, my stop will realistically be, technically, I mean, if you really want to be like pedantic, your stop should be, above here, right? Like above the, obviously where the buyers failed and the sellers came in. Now, if it starts, pushing down a bit, if we start getting above those sellers, because essentially you're jumping in, hoping those sellers will become quite effective at pushing the market down. But in that moment of time, you don't truly know, right? So you are front running. You have to front run it a bit. That's just a reality in trading. If you got perfect confirmation, the move has already happened by the time you jump in. Does that make sense? So you have to kind of front run a little bit. So your stop really, can be up here. That's absolutely fine. If you want to be really crazily, cautious, I mean, just above that candle, right? Where the sellers came in. Because if the sellers can't hold the buyers back from pushing it up, you are wrong. End of story, right? But the reality is, on a bit of a choppy market, you know, the buyers are allowed to wick it a little bit or go up a little bit, right? And kind of fail, and sellers come, you know, catch them a bit late and push it down. That can happen as well. So my stop is kind of fluid with what I'm seeing in the actual order flow. Do you know what I mean? But it does generally align with structure, because the only time it wouldn't align in structure is if I see something happen. Oh, something's happening. We're breaking down. Where are we on this? We're still very much in that kind of range a bit. This could be just a little false breakout, to be honest. We're just about to touch a gap. It's just moving so quick. But like, for example, if I see something in real time on the footprint, right? Let me try and explain this the best way. Imagine right now that 110 that we just saw on the buy side instantly drops to like negative 200, and the candle, like in a split second, just drops down. That would catch my eye and be like, whoa, there's a very aggressive seller right here, like who's serious, like a big seller who's very, very serious. I would happily put my stop. If I enter, then I would happily put my stop above them, like slightly above them, because they're so aggressive and so serious about pushing the market down and are willing to go in heavy in size, right? If they get tested, they're probably going to really defend their position and go in hard, right? So if they fail, of course they can fail, right? Then I want to be out as well. I'm just trying to piggyback on their trade, essentially, right? So seeing how quick the candles move in relation to what you're seeing on the actual volume can give you a bit of an indication of, you know, who's just done like a chunk of orders really quickly and really gapped the market a little bit, right? Because that shows intent. It's more about the intent of the people behind it, okay, as well. You know, if there's an institution dropping 300 contracts aggressively right now, they have intent to, you know, push the market up or down or whatever, right? So you kind of want to that intent is what's important as well, not just the number, not just, you know, the size, but the intent is important, because the intent means that they're going to really try and defend that, because they're serious. They're not just kind of I'm testing the waters, none of that kind of, okay, we'll scale in a bit. Those people don't have that much intent. Do you know what I mean? So watching it really live can give you so much information. And a good way to do this is just screen record. If you haven't got the time, I tell you what, just get a screen recorder, record the footprint, put it on auto, right? So it moves along. Record a few hours of the New York Open and put it into and just replay it bit by bit, you know? And anytime you see something like that, make a little note of it, you know? And then copy, you know, go over to the actual chart and see, you know, what price point it was, which candle, and see the kind of results. That's what I did a lot as well in terms of back testing with the footprint, was literally record the screen and then kind of, and I even went as far as like going not second to second, but like almost frame by frame to see, match it with the depth of market of what I'm seeing, and to try and figure out, is there any kind of statistical thing I can figure out? Didn't really get any real, like when I did that, I didn't get anything too, you know, amazing, but I tried a lot of like random shit out, you know, to find some kind of golden edge. But I kind of realized after a while there is no golden edge. It's just intent. Unfortunately, it's a very human thing. It comes down to intent, and you have to read it as that. So, but yeah, definitely screen record, you know, play it back, because I know it's a bit difficult sometimes to just stare at the screen live and waiting for something to happen. But yeah, you can definitely learn how to read it and train your eyes quite well that way. Hey Sam, good evening. Benjamin, good evening to you. Can you refresh me about this delta percent and session cumulative volume? Absolutely, I can do that. Let me just read the other comments real quick. It is wild. It's staying above 25,800, but won't hit yesterday's close at 25,999. Yeah, just bounced off the 5-minute opening range. Interesting. Yeah, pretty much. It was still very much just stuck in a range here. I think it might want to start breaking out soon. It looks like, the buyers tried to push it up. They're starting to fail. This could be finally something now happening. But this could very well be, again, a bit of a false breakout and we go back in. So back to what Benjamin asked. Autumn, good to see you as well. Yeah, so the delta percent and session cumulative volume delta. So delta is kind of good just to see in terms of, overall volume. If you see just like a massive spike in volume in a whole candle, all right, quite interesting. Like here we had a bit of a spike. Sorry, at this 900. All right, quite interesting. Buyers are coming in very aggressively. You can also see it in the footprint, just the amount of volume there is. That will maybe keep your eye on it. See what happens here. Are these buyers failing? Are they gonna are they able to actually move the market up much for the amount of volume they posted, or are they starting to struggle? That can give you an idea that these guys might get squeezed out potentially. And here they failed and they got squeezed out, right? So I kind of use it just not really for entry requirements or anything like that, just glance at it every so often. Look at the actual delta. It kind of tells you, I guess an imbalance so much rather than aggression. Now the delta percent is more actually a measurement of aggression than the delta. So the delta percent is actually very, very useful. And I don't really talk about it much, but it's very useful because what it shows, it's basically the delta divided by the total volume, right? So it's a percentage, obviously. So 20% here, right? That means there was 20% more selling than buying. That's all. That's the only way you got to read it, right? Here's 12%, 12% more buying, 25% more buying, only 9% more selling. So when you see like a really high delta percent, that's actually shows you a lot of aggressions in the market, right? Because the delta can slightly be deceiving sometimes, right? Because you can have quite a big delta, but the overall volume might be more on a smaller delta candle, right? It just means that they were more balanced, right? So the delta percent gives you that actual, what is it overall to the volume posted? It gives you a bit more clarity in a weird way, right? Because it shows you true aggression, right? So here, 36% is a high delta and 36% more buying. That means this was very aggressive, right? From the buy side, a very aggressive candle, right? Because the delta is high and the delta percent is high. A lot of aggression. Now, if I find, again, here was a lot of aggression from the sellers, high delta percent, high delta as well. Okay, interesting. So you got a lot of aggressive buyers, a lot of aggressive sellers in two separate candles. Who's going to win? And you're kind of looking for, the buyers failed quite quickly. Sellers are now coming aggressive. Will they beat those buyers? You can front run it as a trade. And like I said earlier about the stop, if you're wrong, if we go above those sellers, we're wrong. So you can have a really tight stop. Yes, you're going to get stopped out a lot more often if you front run, but your stops are tight, and you got to really stick to them. But you can catch half decent moves then. Otherwise, you want to wait for confirmation. Confirmation really wouldn't come until around here, I would say, because now those sellers are effective. More sellers are coming in. It's still pushing. All right, yeah, good, jump in. And you get a bit of a smaller move, but you have a much higher chance of actually, being right. So there are really two ways of playing it. You can front run a bit, or you can wait for confirmation. Both are completely valid to use. It really comes down to what you prefer. And then the session cumulative delta is essentially, I only really use it in a ranging market, right? Whenever the market goes sideways for a little while, not like a few candles. I mean, here, it really didn't really go sideways for much. There's only a few candles. You're looking for like a proper range, like a nice tight range, right? Like we've had a pretty decent tight range here earlier. Now it was just before the open, so again, the open is it's like a separate session. Essentially, you got to look at it. But if we get a tight range somewhere, I can kind of show you how I use it. But I'll explain it here, for example. So when you have like a real tight range, especially after a move, like a move up or a move down, that's usually some kind of accumulation or people unloading orders passively. That's usually why the range occurs, right? Because it's people getting out or getting in slightly, right? Now, if you look at the cumulative volume, cumulative delta at the start of the range, and then compare it wherever you are in the range, it can give you an indication of what is more likely going to happen next. So in this case, it was more sellers. We started around 900 to the sell side, and we were about minus 500 to the sell side towards the end, but we didn't really go anywhere, right? We kind of just went sideways. Technically, sellers were more efficient in that range, believe it or not, right? Because they put in less volume to keep the market flat than the buyers put in to keep the market flat. But again, it's only a short period of time. It's not really that much of a difference. It's only 500 contracts or so, even less. And also we are in a bigger range here as well, and we're at the bottom. So even though sellers were slightly more efficient, the reality is buyers could very easily overpower that efficiency just with a bit of extra volume, which they did, right? So it's not like definitely it's going to be a short. Only when you see it really extreme after a long range, like we're talking 20 minutes, very tight, and you see like a imbalance of like 2,000 or 1,000 contracts or 1,500. That's when generally that has a very high probability that the more efficient side will win. Okay. How do you get the delta percent at the bottom of the footprint chart? Easy. So just double click on the footprint. So you open up the settings. If you scroll down to show summary info, it has table. You can use info box, and it's like a little box below the candle, but that's, I don't know. You can use that version if you like. I personally like the table. And just select session CVD and whichever one. I mean, they got a few here as well that you can. Minimum and maximum delta can be quite useful sometimes as well. I don't have it because there's too much stuff for them. But essentially, that would be the maximum delta in that candle and the minimum delta in the candle. So you can kind of see using that. Let me switch it on and get rid of the delta percent and delta. And I can kind of show you what it means, right? So, actually, I need the delta on as well for this to work. So I've got to switch on the delta as well. I'll get rid of the session delta. There we go. So this is the actual delta it closed at. Now within, for example, this candle here, the delta the actual delta, well, that doesn't actually make sense. I don't know what's going on here. I think TradingView's got an issue here. Because that doesn't make any mathematical sense right now, what I'm seeing. Because the maximum delta cannot be lower than the actual delta. All right. Well, I don't know. I think there's definitely some calculation error right now with their minimum and maximum delta, so I wouldn't trust it right now, which is slightly worrying, I guess, because that is mathematically impossible. Because the maximum delta tracks the maximum the delta was in that candle. It can't be smaller than the delta it closed at, right? It has to either be the same or more. Otherwise, that would be the maximum. Do you see what I mean? So I don't know. I think I have looked at it before and it seemed to be absolutely fine. Right now, there seems to be some issue by the looks of it. So I wouldn't fully trust it right now, to be honest, what is printing. Again, that's impossible. we're seeing, I don't know. Yeah, I wouldn't trust the minimum maximum delta on TradingView right now. Normally, I mean, I have used it before and I have looked in it, and I never saw it make a mistake like that. So there's some calculation issue right now on their end, I'm thinking. Because let me see pre-market. Maybe it's time to do once the market open. No, it's been doing it before. That's definitely like here, okay. You know, the delta is the same because that is the maximum overall. That kind of makes sense. No, there's definitely something wrong here. All right, don't trust the minimum maximum delta if you got it on the chart. It mathematically cannot make sense what it's showing. So I would definitely not be using that for now. I might have to switch to a different platform for now, because now I'm starting to question: is the data I'm seeing right now on TradingView correct? Because if they've made a error here, how do I know that what I'm seeing here is now correct? You see what I mean? So I'm a little bit like, it's a little bit worrying because, like I said, it's impossible for the maximum delta to be smaller than the delta it closed at. That doesn't add up. First day of footprint, I'm up 1,100. Daniel, amazing stuff. Amazing stuff. How long did it take you before you were profitable? You know what? This sounds funny, right? So when I worked on the trading floor, I was profitable like within. I think it took like a year to become profitable because they taught me. But here's the reason why I was profitable, because we had a risk manager. So um, whenever, for example, my emotions got into play, or I wanted to overtrade or revenge trade, or I lost, or something, like there was literally a risk manager who would stop you from doing that. Do you know what I mean? You had a person say, no, stop. It's all right. You're done. Do you know what I mean? And shut you out. So their whole job was to protect the firm's capital. So you couldn't let your emotions take over. Do you know what I mean? You couldn't put in size and double up and martingale and do all that crazy shit, right? So on the trading floor, it's actually easier to trade, believe it or not. Now, when when the firm closed down and everything, and I just became like an at-home retail trader, my results started dropping because all of a sudden I had to be accountable for my own emotions. And that took me, I'm not going to lie, it took me a while to control that, even though I knew that I shouldn't be doing it. It wasn't like I didn't know that you shouldn't, you know, you got to control. I knew all this shit. Like, of course I knew it. But there's a difference between knowing it and actually putting it in practice, right? And I was used to having someone actually there to stop me from doing it. I never really had to learn to control my emotions. So in a weird way, I was profitable and then unprofitable until I learned how to control my emotions and became profitable again. So yeah, very weird, I guess. But yeah, so really, emotions are like, it's actually easier for the institutional guys because they have a risk manager, you know. So I would say if you got like a friend who you trade together, hold each other accountable. Do you know what I mean? Hold each other accountable. If you like, have a buddy or whatever, or I don't know, whatever, and you guys like to trade together, if you guys can hold each other accountable in terms of risk, I'm telling you, that's actually, I can see that really, really having a big impact. Because when you're just by yourself, you're down a bit, and you're thinking, I could just double up my position, put in an extra contract, and then I'll make it back quicker. It's a slippery slope. Do you know what I mean? Very hard to kind of control your emotions in those moments. So, and unfortunately, that takes a lot of time. Some people are, very good at being disciplined from the get-go. Me personally, not really. I'm not that disciplined in general. So it took me a few years to kind of really kind of learn that discipline. So yeah. Yeah, how accurate is TradingView's volume? I've seen some people doubt it. Look, I mean, it's generally pretty accurate, right? People who doubt the volume generally, it's because they're using it on the wrong, they're using it on like a CFD chart and it's like tick data and they're like, oh, this is bullshit. But if you use it on the actual correct like CME, instruments, the volume is pretty correct. Now, the thing is, every order flow software out there doesn't get, all they get is from the time and sales, right? The price an order was executed at, but you get it in like lumps. So every software has a different way of calculating how to distribute it in the footprint. So there are going to be a little bit differences between different softwares, right? Sometimes it might look even a bit dramatic because sometimes orders are executed and even the CME doesn't know whether it was on the ask side or bid side, right? They just, because the market can be so volatile. So TradingView might see it, okay, we think it's on the ask side. Another software might think it's on the bid side. And actually you got two conflicting things, but really it was executed in like within the spread essentially, right? So those, and that can kind of, create a bit of data differences between different platforms. But the reality is you get that with every platform. So you kind of just have to stick with one. And yeah, okay, sometimes TradingView might have got this wrong. It might not be 91 buyers, it could have been 91 sellers. I don't know, right? And another software got it right. But then other times TradingView got this correct and another software got it wrong. So you kind of just have to pick your battles. Do you know what I mean? All of them are going to be somewhat a little bit different, but ultimately the general scope of it, they're all pretty, accurate. Because you're ignoring most of the stuff you're seeing. You're really only looking at certain times, certain areas you really kind of want to, focus on. I don't really care what's happening right now. I'm not, do you know what I mean? It's just, I don't care. So it doesn't matter really that much all the time. Do you mean numbers are changing and not the number of orders? What do you mean make money online? Do you mean numbers are changed and not the number of orders? You know your stuff, bro. Thank you, Peter. Keeps us updated, bro. If you switch platforms, so we will jump the train as well. I mean, I have other platforms I can use, like I've got like Go Charting. That's an all right platform. Like I have other platforms just in case there's errors with one, or I see something that's or they're down or whatever. I can switch to another one, like backup platforms. But ultimately, I'll still be using TradingView for the most part. Thanks for the honesty, bro. It makes sense. You're welcome. You're welcome. Thanks. Hi, Sammy. You called today a range day right at the start and you were spot on. What made you see that so early? I'd love to learn. So great question. Great question. So the way you can kind of spot whether a day is going to be a range day, it's not, again, 100% accurate. You're going to be wrong sometimes, but it's literally just dead on the open. What happens in the first few candles can kind of, and the volume can kind of tell you what's going to happen. So right off the open, we had, a ton of buyers and then a ton of sellers. That to me straight away indicates that both, buyers and sellers they're just fighting. So for the most part, they're going to keep fighting until the fight is over, until one of them gives up or whatever. And historically speaking, both sides are very stubborn. Do you know what I mean? It takes a while before someone wins. People don't really give up that quickly. So just based on that, like the way it opened, there was just absolute kind of no real direction. Everyone is very adamant, buyers are very adamant to push it up. Sellers are very adamant to push it down. And you can see that in the volume. Most likely there'll be a range for a bit. Now, if it opened up very bullish and continued and there really wasn't any real sell pressure coming in, all right, good chance that we're probably pushing up at least for, a while, and vice versa if it was bearish. But then you get sometimes those weird days where it will look like it will be really bullish or bearish at the beginning, boom, boom, and it will push down or up for a while. Like I'm talking maybe a few minutes, and everyone thinks, oh, we're going down or we're going up or whatever. And then out of nowhere, a V-shaped reversal will come in. Now those days are, you can't really tell from the open, because what's happening on those days is, yeah, let's say it pushed up, loads of buyers are coming in, and people believe, but the people who want to sell have yet to enter. There's some institutions, some big players who are like, yeah, we want to sell up here, and the market's pushing really nicely, and then they just come in with absolute vengeance, and boom, V-shaped reversal that shit right down. And you can't predict that shit. You see what I mean? You're just, whoa, like, damn, what the hell happened? And it just blindsides you. So then you just have to react. You know what I mean? You're like, all right, get out or whatever. But those days sometimes do happen as well. But generally from the open, especially like for more range days, you can kind of see it, because that's just, they're locking horns. Do you know what I mean? Lots of volume from both sides, and they're not going anywhere. Good chance it'll be a range day. The biggest challenge in trading is waiting for the level to play. If we can conquer that, the rest, they say, is history. Absolutely. Patience and discipline is probably like the best strategy out there. You can make trading work if you have really good patience and discipline. You can trade a simple moving average and be profitable. Like, truth be told, you really could. I'm not saying you're gonna make more money than if you learn something a bit more in depth, but you can make it work. Like, I know a guy who trades a daily chart with I think like 2 moving averages, and he's profitable, but he's very, very disciplined. And I'll show you what he does afterwards. Let me just get through some of these comments. How do you calculate your risk, like when you're up or down on a profit? How do you calculate your risk, like when you're up and down on a profit? What do you mean, Benjamin? Like, calculate my risk when I'm up or down? Just explain a little bit what you mean. This guy's the real deal, man. Thank you, Imperio. So don't you kind of just have to look at a big spike of volume and see what price action does, and that will give you your confirmation? So don't you kind of just have to look at a big spike and volume and see what price action does, and that will give you a confirmation? Are you talking about, whether it's like a range day or like from the open, raise to rain? ATAS platform is also great, in my opinion. I've heard a lot of good stuff about ATAS as well. Daniel, the NQ market sucks today. It really does. But it looks like, nah, we're not pushing. I think we're just back in the range again still. I mean, in footprint, do you mean numbers of footprint are change and not the number of orders? Yeah. Sorry, I if I say orders, I mean the footprint does technically show it's not orders, because one order could be 50 contracts. It's actual number of contracts. Sorry, is what the footprint shows, not orders. But if I say orders, I apologize, but you know what I mean. I mean contracts. Yeah. Since we spoke about Tesla yesterday, interesting in the news today about talks of Tesla to merge with xAI and maybe SpaceX. Damn, Elon can't make his mind up, can he? Can you show us volume profile from the open? The volume profile from the open will just look like, I can pretty much tell you what it's going to look like. It's just going to look like a V shape. It will be like that. That's what the volume profile will look like from the open. So if I draw it from the open, yeah, it's just a V. That's essentially every range just kind of has that V shape. That's how you know you're in a proper range, when you got that, it's like a pyramid on the side, essentially. And it is completely useless. The volume profile is completely useless in when you see that shape. Just there's nothing to, like, it's useless, essentially, right? Are you living in the UAE? No, well, I visit the UAE a lot, especially for work and stuff. So I'm there like many times a year. In fact, I'm there next month for the financial trading expo or whatever. So if any of you guys are there in Dubai, I think it's February the 10th till like the 12th or something like that. There's like a big financial expo Loads of companies are there, loads of traders. I'll be there. So I don't know if any of you guys happen to be there, and you're at the expo. I'll be there, and it'll be great to see you. Hey Sammy, it's not really Tesla causing all this. The market doesn't like Orchin, the new Fed nominee. Right, shutdown looming and Iran tensions that could result in attack. Man, the world's going to shit right now, isn't it? It's just like, when will it stop? We just want peace, like peace in the markets. We just calm down. You know, crazy day, crazy times even. I'll be in the UAE at the end of Feb. Yeah, I think I'm leaving like 16th or something. I don't know the exact date, but I'll be back in the UK again end of February. Do you trade with a prop firm? I work for a prop firm. Ola Prime is the prop firm. So technically, yes, I trade with them, but I'm also employed by them. So yeah. Yesterday, when most people are losing money, was much profitable for me because I was filling gaps of gold and silver and run away from a trade in seconds. Amazing stuff. Hi, Sammy. Let's go. Fatty, good to see you. Breaking through, opening range low now. Great. Hello. What's going on? Have I missed anything? Charis? No, you haven't really missed anything, to be honest. We just had a little range. You came in at the right time, just as it looks like we're breaking out now. So, well timed. You missed out on a banger trade. You made 100K. I wish, man. Use of session CVD. I'll make a video properly about the cumulative volume delta. But I only really use it in a range, right? Like I think we had a little bit of sideways, like you know how we had the sideways movement here. I would use the kind of the session CVD, and I would really use it. Look at the start of the range. We were at 879 to the buy side, and then kind of like near the middle, we were flat again, 800, so completely flat essentially. So there it was useless. But like say that number was 1500 or 1600 to the buy side, right? Then I would know, okay, there was an extra 800 buyers came in this small area, couldn't push the market up. Sellers are therefore more efficient, more likely it's going to go down. But in this case, it was completely flat. So it was a very balanced market. Sammy, take us to the trading paradise. How do you identify the traps with footprint? Okay, so a trap setup is exactly like what you're seeing here, kind of, right? You got a bunch. This is basically a trap setup. So a potential buy is happening right now, for example, right? Because you got a bunch of sellers that came in aggressively. Now these guys are probably going to get quite nervous now that they're in drawdown. So they're trapped, right? Because it didn't go any lower down, and there's a lot of them. So there's a good chance that these guys are potentially trapped, right? So if we push up a little bit more, they could start failing. So you could, like, theoretically, you could jump in for a bit of a buy here. So like I'll do it as an example. I wouldn't really want to do it just yet, but you could, as an example, you could jump in for a buy, potentially get a small scalp, right? Because I'm not really seeing buyers are effective either, to be honest, right? Because there is actually quite a bit of buy volume in the market and they haven't pushed it up either. So it doesn't look good. Do you know what I mean? In that respect. But if we, break below those 300, for example, cut the trade, right? It's not going to be good. So you can put a stop pretty much at like 778, pretty much where we almost got stopped out now. And then, like, no, see, the buyers couldn't push it up. Not good. You want to get out, right? But like I said, a trap setup is basically when you see a bunch of sellers or buyers, sellers at the bottom, buyers at the top, and they are unable to get the market in their direction. It's also called absorption. It's basically the exact same thing. those guys are going to get a bit nervous as they go into drawdown, and there's a good chance they'll get squeezed out. And if they do get squeezed out, they'll all start dropping off, and boom, 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 the market could go up, right? But you also want to see the reason here it's not very good is because look how many actual buyers came in, but they also couldn't push the market up. So the buyers is the sellers. So you want to actually see buyers become a bit efficient and actually able to do a bit of damage, right? If the buyers are putting in a lot of volume and they can't push it up, well, they're no different to these sellers essentially, right? So yeah, that's why I said this area is not actually really. I wouldn't really want to jump in just yet, based on that, right? Fatty, if anyone can, it will be him. Mate, there I was thinking that this is the only time I can trade, and I was busy. I was thinking of Sammy making banks without me. No, today's been. Oh, look at that. Well, there you go. So this is kind of the confirmation right there. That 200, that would have been your confirmation if you wanted to really wait for the trades. That was your confirmation, right? Because you can almost guarantee those 300 sellers all got their stops hit here, right? And that's them out the market. And the moment they get out the market, it pops, and it can that pressure is released, and then boom, 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 the market really goes up again. So you could have front runned it like I did earlier. We just jumped in. You could have front run it, but the confirmation wasn't there until here, right? That was the confirmation for the trap setup. So that was actually, yeah, that was not bad in terms of just as you asked about the trap setup, it just happened to appear. So good timing, I guess. Hey, Sammy, since you work at Ola Prime, could you suggest to the decision makers what they add the deep chart platform to the offering? I can try, but realistically speaking, it depends. There's a lot of like kind of, licenses and all that kind of, I don't know if it's even, licensable. But we'd have to have to open up a, dialogue with the guys behind Deep Chart, see if it's possible. But yeah, I could definitely make the suggestion, but there's a good chance it probably won't happen. Some prop firms already off. Oh, do they already offer it? Okay, well in that case, if it, I thought maybe Deep Charts hasn't offered it to any prop firms. But if other prop firms are doing it, then absolutely that could be possible. I'll let them know. Sammy, do you ever use VWAP? Very rarely, very rarely. Not because I don't think it works or anything like that. It's just too much stuff on my chart then otherwise. So I took that long as per. Nice scalp. Excellent. Well, I'm glad you caught it. Really good stuff. Are you in a trade? No. I wasn't in a trade. I was just explaining the trap setup of, but I'm not actually in a trade. But my fixed range volume profile marked Monday, January 26th low and Wednesday high. I didn't extend until today. Is still the low volume node on that fixed range volume profile good to trade? My fixed range volume profile setup is good. Mark that Monday, January 26th low and Wednesday high. Let's have a look. It should be fine, I believe. So Wednesday is. Did you say Wednesday low? Oh, Wednesday high. Sorry, January 26th low. That is Wednesday. Hi, I didn't. Oh, sorry, Monday. Okay, I'm sorry. I completely. Yes, right. So this one here. Yeah, I mean, I see which one you've got. So you've got it basically here to here, right? It's definitely still in play. Like most of the gaps are kind of in line with like the longer term one, and this is what you'll find. Like I started it Wednesday 21st, that whole move up. But you look, there's a gap, and I've got the gap here as well. There's the gap. I've got the gap here as well. Little bit different here, but I haven't drawn that one out because we traded through it so many times. So I've ignored that one. And then you got another one a little bit higher up here. I don't really have that one. But yeah, so they're in line. So absolutely, it's completely fine. Deep shots can connect with any prop firm. They said, oh, that's incredible. These guys are insane, the deep shots guys. I still need to get it. Okay, so they do have it. Amazing. All right. Well, I'm gonna try push for that, because that would be awesome, man. That low volume node we were just just in on your chart, the dark shade area with high at 25.85. I can't see that low volume node in my setup. Please show where you got it. Yeah, sure. So, okay. Yeah, it's this one here. Now, this one I didn't. It yes, it respected just now, and it has been respecting in this range, but I've kind of ignored it a little bit, just because we traded through it so many times already. We went through here, went through here, but I also saw a little bit of kind of respect, like here. But I'm kind of like, it's very 50-50, this one. It hasn't really held up that well. So I that's why I'm not really too kind of like, oh, we're in an area. I'm kind of ignoring it a bit. Annoyingly, yes, since this open, it's actually respected it quite well, which is a little annoying. Who would have known, right? But it's basically a longer medium term. It's from, the push up all the way here, and then I've actually got it set to extend right, so it's actually even including this pullback here. But I can't imagine it'll be that much different if I get rid of the extend right. Yeah, it's still there. It's just a little bit less defined, but they're identical pretty much. All right. Are you trading NQ or MNQ? Trading view is NQ, Project X, MNQ. Sammy, if your prop firm use Rhythmic, there is no problem to use. Okay, perfect. Yeah, we offer Rhythmic. Yeah, well, we did offer Rhythmic, and then we had to like do a few changes or something. But it's definitely coming back if it's not currently live. 100%. Our chart figures differ. I'm using the 1 minute footprint chart on TradingView. Do you use 1 minute? Yes, 1 minute is predominantly what I use for my trading. For the footprint, at least 1 minute. But truth be told, you can use 2 minute, 3 minute, 5 minute. 5 minute, it's obviously. I mean, I wouldn't say it's worse or better. They're both very good. Some people like the kind of smoothness of the 5 minutes, a bit more, bit more calm, I guess. But yeah, 1 minute is good. I like 1 minute. Never had so much information in one stream. This is very ranging all the time inside the fair value area and inside yesterday's range. Can't decide, but on higher time frames like daily, you see these nice projections on high volume nodes. Yeah, we're just false breakout, back up to the top again. It's the same shit. We just rotated over and over. I mean, what can you do, right? Market's a bit boring. Annoyingly, I do have to go at 4 p.m. UK time. I've got a meeting I've got to be at. And I need like a few minutes just before the meeting. So I'll probably have to go in like, say 15 minutes. I have to leave. And I just don't think we're going to really see much, unfortunately. It's just been up and down. So apologies for the shit market conditions. Hits the real gem, bro. I agree. It's only my first stream. Oh, I didn't realize your first stream on. Oh, well, welcome, Emporio. Good to see you. Good to see you. I'm glad you're enjoying it. It would have been nice to actually, have taken some trade of some kind. But I don't know. I don't really like trading range bound markets. I don't know why. Because theoretically speaking, it's absolutely fine to trade. But there's something in me. I just don't really like trading range bound markets. I don't know why. I couldn't tell you why I don't like trading range bound markets. Risky business. Loving your streams, man. Order flows the way. Risky biscuits, even. Sorry. Thank you, Risky. Thank you. A boring Friday. Hey, capital preservation is a real thing. Exactly. Holy, you got it bang on there. You know, some days, even if there's not a trade and you don't trade, better than losing money. You know, so it's that's what it's all about. I don't trade futures, I only trade gold, and sadly fell my Ola 3 challenge account on gold. Next month I'm going to switch into futures and take the 50k account. Yeah, I would say, you know, it depends, Benjamin. If you're using like order flow, you can still trade like the CFDs, but obviously use the futures data, but then really only trade the NAS 100, the S&P 500, the Dow. Probably not the Dow actually, because that's a bit harder. But if you're switching to futures, again, it's the same thing essentially, right? There's really not that much difference in terms, at least in the prop space, right? The difference with the CFDs, you can hold them overnight and you can swing trade, but unless you're a swing trader, futures is really not that different, right? But yeah, I think you'll find it a hell of a lot easier. Trying to trade gold on order flow is a lot harder than trading the NQ or the ES, right? The S&P. So no need to make it more difficult for yourself. I know gold lately has been absolutely insane. And if you're doing more swing trades with gold, looking for buying the dip because it's just, you know, pumping up constantly, absolutely fair play. But if you're like day trading and scalping, trust me, it's harder with gold. It's a lot harder. All right. I wish TOS would have footprint charts. What is TOS? I'm trying to think. TOS. I don't know what that is. Order flow strategy is not really for commodities. Yeah, it's just because the market is smaller. Oh, Think or Swim. Oh, okay, Think or Swim, of course. Yeah, no, I've heard of them. Yeah. I shouldn't really. Yeah, I got it. Order flow strategy. You can still use it, but it's just gold is such a big market. It's like gigantic. The orders you're seeing on gold, like if we go to GC right now, because remember, this is only the futures, gold futures, right? And only the US exchange, essentially, right? So this 27, you know, means, you know, or 25 or whatever, or this 37. Yes, there were 37 extra buy contracts on gold here, but it's not factoring in the ridiculous amount of other, you know, people who bought or sold gold in that not on this exchange. Do you see on Comex? So it's because gold is such a big market. The volume you're seeing is a much smaller chunk of the overall thing that affects the price. So don't get me wrong, the futures market of course affects the gold market. If you're seeing really extremes, yes, that will affect the gold market, right? Like maybe we can see something where I can show you like extreme, you know, volume or something. We don't really have it. But do you see how like the volume just is a bit shit, right? Like, you know, it's a lot harder. I can't even find heavy volume, right? I'm trying to literally find out a pocket of heavy volume and I'm struggling. It's just a lot more difficult to trade. I know gold is exciting and all that, but believe me, if you're going into order flow, trade the ES, especially as a beginner. I'm telling you, this is the cleanest market you could trade. Let me just make the footprint. Let me just go to auto mode. So it makes, look at that. Look at the volume difference, right? You can like, this is a great short potential right here. Look at all the on the ES, great short potential, just straight away off the bat. Dip your toe in for a potential short, you know, because you've got a bunch of you know, buyers trapped at the top here. We're closing down below. If we break above those, you know, you can have a stop, you know, here, potentially, you know, a quick scalp, maybe a few points down, whatever. If those sellers, again, you know, we're trapping those buyers at the top, let's keep trading below them. The ES has so much opportunity, just like the footprint is easier to read because it's a full market, right? Now, yes, there are a few other factors that affect the S&P's price, right? But the majority, like the futures market, is the mass majority of it. So what you're seeing being printed on the order flow, really has an immediate effect to the price of the S&P. Do you see what I mean? Like straight off the bat, you're seeing a potential trade, a scalp trade right there. With gold, it's a lot harder. You're really looking for exceptional things, and you're going to be waiting around for a hell of a lot longer to find something, right? On gold. You can have footprints and order flow on MT4 entire cluster delta. Yeah, Luca, cluster delta, it's crazy. So cheap, literally $7.50, like you said. And they have their own software as well. If money is an issue and you want to get into order flow, cluster delta all the way, man. That platform is all right, it's a bit janky, but you get the data as well. Most places it costs more than $7.50 just to get the data. So I don't know how they're doing it, but fair play to them. They've really made it accessible for everyone. Maybe you should stay, Sammy. Market looks ready to move. I know. It's very annoying. Just the market wakes up the moment I have to, unfortunately, start looking to go. NQ at ES volume footprint is very clear. Exactly, Benjamin. Trust me on this one. Start with the ES. The ES is a lot easier to read. Like this little trade here, it's easy to read because the volume is just clear. Like that was dead simple to read, right? Bunch of buyers at the top failed to push it up. Sellers came in. We closed bearish. Again, buyers trying to come in, failed. Sellers now coming in. That's your true confirmation as well. Quick scalp, boom, 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 boom. You're done. Back to the bottom. Like the ES is really easy. I wouldn't say easy to trade because trading's never really that easy, right? But this is the easiest market to trade order flow, hands down, right? And you're going to have a lot more opportunity with the ES than gold, or the NQ is similar, but it's a little harder to read and it's a lot more volatile. But therefore, it's a bit more exciting to trade because you got that volatility. The ES is a bit boring. I'm not going to lie. Like that was 7 points. With the NQ, that probably would have been like 30 points. Do you know what I mean? So, and we can see if that trade was available on the NQ on the footprint and how it would have looked on the NQ, right? So we can make a comparison if it decides to load. Here we go. Yeah, so the NQ, do you see how it's just not as clear to read as the ES? Fundamentally the same thing, buyers at the top, sell pressure, close bearish, buyers try to come in again, kind of failed, sellers are pushing it down, but it's just the volume is just not as clear to read as the ES. Like the ES, it was, a 5-year-old could have picked that out. Like it's very simple to read on the ES. But then again, the NQ, if you did the exact same trade, I think it was like here or something, we would have entered, and yeah, that would have been how many points? 9 points. Whereas on the ES, it was only 7 points. So, it's a trade-off. Volatility for an excitement for, a bit of a harder market to read. But if you're starting out, ES all the way, man. ES all the way. NQ at ES volume, it might be a look above and fill. And if you want to swing, do it with silver or copper. Definitely. Commodities are good for swing trading. Absolutely. I agree with that. Sammy, I actually found the DAX decliners. You know what? I've never tried the DAX, but I'll have a look one day and start looking at DAX. I've never tried. I've always just stuck with the US equities, but Germany, big economy. Yeah, absolutely. I'm sure. Like the FTSE, I've looked at a few times. Truth be told, FTSE was a bit shit. I didn't really like it, but I've never looked at the DAX. So, and I am half German, believe it or not. So I can actually speak German. So maybe I can, reconnect with my German side and trade the DAX. You recommend ES over NQ? 1,000,000%. ES is a better market to trade, if 100%. The NQ is just more exciting. But gold, they always respect the levels in fixed range. Yeah, fixed range, absolutely. Like the low volume nodes and stuff, gold will respect that, but it's more swing trading. So do it or intraday, like more longer term. You can definitely do more kind of, but in terms of order flow scalping, like the footprint, not as good, right? Is this footprint the one that comes with buying CME data? Yes, correct. Jed, that is the one. This is the reason that ICT traders use the so-called SMT divergence, trying to follow what ES does, although it is opposite to what NQ does. Yeah. DAX is easy in London session. I'm going to try the DAX, actually. You guys are convincing me now. The fact that Holy Earth was like, DAX is the easiest or the cleanest. I'm kind of curious now. What do you think about ICT? Look, truth be told, I've never looked actually, I've never studied ICT. I don't really know what they teach. I've seen little bits, fair value gap, stuff like that. Some people are saying, it's based on a lot of the order flow theories. And the only thing I would majorly disagree is if they're using candlesticks to kind of assume where buyers are entering and all this kind of stuff. That I don't fully understand, because why don't you just use the data you actually have? Do you know what I mean? It's like trying to chop a tree down with a handsaw, and then someone comes with like a circular saw or a chainsaw and be like, use this, man, it's a lot easier. And ICT go, nah, that's rubbish. I'm gonna stick with my hands. Like, I don't get it. Just use the easier option, right? Like, you don't need to guess or try and figure it out based on clues in the market. You can literally see it. So I never understood why don't you just use the data? It's there, you know. I can understand it for markets where you don't have that data, right? Like euro, US dollar, you don't really have that data. Fine, you've got to have to take clues with the, you know, try and figure it out based on other things. But if you're trading, especially if you're trading the indices, and that I don't get. Like, the data is so good with the ES, the NQ. You really don't need to like use anything else. ICT is order flow, but with eyes closed. That's kind of what I'm getting, like the what do you call it? I'm kind of getting the impression that's what it is. ICT is just rebranded theories. ICT community said they trade like a bank. I highly doubt it. They trade like a bank, because if they think supply and demand is still like, from my understanding, this is what they think still, that supply are buyers. Sorry, supply are sellers, demand are buyers. Then they don't trade like a bank, because the truth is, demand are buyers and sellers, supply are buyers and sellers. These guys in the book are supply. All the aggressive people who are hitting are demand. And I made a video actually about supply and demand and how the market works, blah blah, and all that kind of stuff, where I break down exactly how the banks truly trade, like how the institutions. Trust me, I've seen it. I've been on that floor. I know what we do, or what we did, and what we still do to this day. Yes, a lot of it's going to be algorithms today rather than humans, but the same principle applies, right? I explain it in a video on my channel, and that's really how it's actually done. Like, anyone saying it's, oh no, it's done this way, I promise you they're talking shit. Like, please don't listen to people who are like, I have no reason to lie to you on how they trade. Like, genuinely, that is how they do it. And yes, there is a lot more stuff that I probably don't know now because of high frequency trading, and we've gone into that whole quantitative world now, which is a whole nother thing. And I'm not even going to pretend I know what they do on that level, because I genuinely don't. But from my experience of what I do know, and what I will only comment on things that I truly know what I'm talking about. If I don't know something, I won't pretend like I know it, because yeah. But damn, guys, I do have to be in a meeting in 2 minutes. I hate this, because I love to, I love being on these lives. I love seeing all your comments and talking to you guys. But unfortunately, I do have to leave, as annoying as it is. But thank you all for tuning in. Honestly, really, really appreciated. Got 108 viewers. I think that's a milestone right there. I don't think we've ever hit that. So thank you all. Have a great weekend. I'll see you all Monday. And yeah, I'll catch you all then. Thank you all. Take care, my friends. Bye-bye.